at the right time.
Mr. N.S. Venkatesh, CEO of AmFi, is joining me right now to give us an update on the monthly numbers that were just disclosed some time back. Mr. Venkatesh, first and foremost, it's very encouraging to see that we have seen a rise in the equity inflow number in excess of 10,000 crores if I put in equity plus the ELSS numbers. Now, what factors do you think contributed to such an increase, especially given the market conditions that we saw in the month of September?
Yeah, I do agree that the equity numbers have shown a positive trend compared even to the last month. It has grown a little bit. It is roughly around 12,000 crore if what we call as equity ELSS balance all put together. I would say that one is the SIP flows which is coming in, the retail flows that is coming in. The retail flows has been steady. I would put it like maybe the market is slowly maturing, the investors are maturing, and they are not moving away from the equity market at this particular point of time. They believe that this correction, whatever has happened in the equity markets, is temporary. So they believe that this is the right time for them to continue investing into the equity market. I agree with you, the markets have been totally volatile during the last month, and it was a good number to have.
While it was very encouraging to see the equity number, but on the other hand, we had a huge drawdown in the liquid space, which I believe saw an outflow of over 2 lakh crores. Now, normally, it would not be concerning because this is a general phenomenon that we have seen during the quarter end due to advance tax payment. But this time, the number is exceptionally large. What factors do you think went into such a big drawdown in the liquid space?
No, I believe it's mainly the liquid funds are mainly a wholesale market in the sense that it is invested by the corporates and the banks themselves, the bank treasuries and corporate treasuries. So definitely one is the drawing down for the advance tax purposes and capital adequacy purposes for the banking sector as a whole. So I think that is one thing which had happened. The second thing is the tightness in the market, liquidity tightness in the market, exacerbated by maybe they thinking that the monetary policy is down around the corner, so the interest rate hikes could be there, so they do not want to take any mark-to-market losses either in the debt funds. Liquid funds, it may be very, very minimal, but in the debt funds there could be large mark-to-market losses which could come up if, let us say, the rates are hiked. So I think it's a combination of those factors plus the little bit of the whatever unfortunate events happening of some defaults happening into the system. I think that has also put more pressure onto the corporate treasuries and the bank treasuries to pull out the money. So the normal trend would have been, say, a lakh of crores could have gone out for the quarter end effect, but I think it has doubled during this period because of all these factors put into together.
So it's largely a one-time impact, or do you see continuation of this trend?
I believe that this will be a one-time impact. The liquid funds will definitely be a one-time impact for the simple reason that liquid generally is, let us say, an overnight plus at least a 50 basis point sort of a spread is what the corporate is getting in. So to that much extent, I think he will come back to the liquid and money market funds that are there. On the debt, he will again reassess what is happening into the situation. One from the rate angle, and another one is from the credit sort of defaults which had happened. So he would like to reassess what is the credit default, the nature of the credit default, and whether there could be more defaults on the way, and then only he will come back into the debt market. So I think liquid, we will see the money flowing back much more faster. The debt will take a little bit of a time.
You also spoke about very robust SIP book. Can you give us a sense of or a ballpark number of what SIP book value can we expect this time around as well? Because that, I believe, will come out in due course of time. What's your rough assessment of what that number could be?
The rough assessment that we have made is somewhere around 7,700 crores, which is still higher than last month's number of somewhere around 7,600 crores. So around 100 and odd crores it has gone up. So that's the rough assessment that we have made. opening of accounts are also more or less steady at over 10 lakh folios that are being opened in SIP month on month. So to that much extent, I think we are doing better. Already from April to September, if you are taking that half year, if you are taking for the SIP inflows, roughly around 7,000 crores if you take as an average per month, roughly around 40 to 43,000 crores has already come into the SIP route for in building up the AUM. Compare that with, let us say, the last year from 1st April 2017 to 31st March 2018, there you will actually see that the SIP numbers are somewhere around 60 odd thousand crores. So we actually see it to cross the 80,000 crore in this year.
Now, in terms of market, what we actually lost, in the month of September, an equivalent amount has been lost already in October. Can you give us a sense of the sentiment that you are receiving from the market? Is there some bit of worry that is emerging into the market?
At this point, we are not seeing a trend or anything like that. There is definitely worry, because naturally when the markets is falling, definitely there will be some worry. But at the SIP level, the retail investors level, we find that they are coming back and investing. The opening of accounts is healthy at around 10.6 lakh folios per month. The closure rate is not that high, and whatever closure is happening, it is happening because of maybe they had a term of 5 years or 3 years for that matter. And when the goals are achieved, they are taking it back. So I would say that there is not that sort of a worry which is coming in, but definitely there is some nervousness in the market.
Final message to the investors, how to weather this storm?
I would say stay invested, because if you are investing in equity, it's a long-term game. You should not be worried for the market volatility that is happening. Market volatility will always be there. You should ride out that market volatility. And if you have an investment horizon of, say, around 3 to 5 years, please stay invested and continue your SIP and ensure that you get the averaging out in your favor. And over a 5-year term, you will definitely reap the benefits of having stayed invested at this particular point of time.
Thank you so much, and wish you all the best for the future.
Thank you.